Good morning and welcome. Patriot Radio News Hour, Joe and Jason on this Thursday, the 4th day of January, and it's a cold one. It was in the 30s here in Arizona. Poor Jason. The heat stopped working in the office there in Fort Lupton. Of course, it was like in the 20s up there in Colorado. But hopefully we'll be able to get the heat back on. And Jason, but he's all bundled up. He's got the leather jacket on. He's looking good, though. He's looking good. 800-951-0592. That is our toll-free number. Of course, the physical delivery of wealth insurance, gold and silver. It is what we do. allamericangold.com. That is the website. I know we've had some issues there. We haven't had. Kitco's had some issues. They got hacked right before Christmas, and they're still working around this stuff. So we'll, as quickly as we can, we'll get the gold and silver prices back up at allamericangold.com. Jason's put the hoodie up. It's probably a little cold over there, Jason.
Yeah, I don't know what's going on. It's I've only been in this building for less than a year, but for some reason it tried kicking on at 8:45 several times, but nothing blew. So the guys are going to get here and start making noise. I don't know at what time. It could be an hour, 2 hours, whenever they get here. But I'll let you know. But yeah, it's not terribly cold. Most people would be like, that's not that bad. It's like 59 degrees in here. But I like 68, 69, 70. That's what I like. So it's 10 degrees, 12 degrees below.
I'll just say that here in Arizona, anything below 60 is freezing. That's kind of our I know, hey, 32 degrees is freezing. No, anything in the 50 degree range or lower, that is technically freezing for us in Arizona.
It'll be all right. It's not the end of the world. Now, if I was on one of these end unit or a single building, right now, as I was telling Joe before the show, that I'm in a middle unit, so I'm thinking the heat is bleeding off from the other units from both sides of me to keep me at least doable. If it was cold, if it was another 10 or 15 degrees colder, Joe, I'd probably just wait. I wouldn't even be on the air because I couldn't handle being in here. But it's doable. I'm going to fight through a little bit of cold. It's no big deal.
There you go. Well, see, that's how tough we are. We'll fight through this kind of stuff. We had it's Jobs Week this week. Now we had the holiday, so we normally would get ADP yesterday. We got it today. We had first-time jobless claims today. We'll get the government's jobs number tomorrow, but nothing in the jobs data today signifies a rate cut in March. Now, right now, they're saying there's a 75% chance of a rate cut in March. I don't know. I'm not seeing that. I don't see that. But, I think maybe June, it would probably be a better, more realistic. Now, the data can change quickly, but we'll see what happens. We also got the Fed minutes yesterday. We had a sell-off in gold and silver yesterday, back higher today as the Fed. We actually got the minutes from the meeting in December. And Jason, not a surprise it was dovish, maybe not as dovish as Wall Street made the Jay Powell press conference, but it was enough to still cling to a cut in interest rates in March, maybe a little less certain of the March date after the minutes, but the minutes did suggest that the Fed is definitely going to cut rates at some point in 2024.
Yeah, and March actually seems kind of far away right now. We just started January, so I wouldn't be surprised at a rate cut in March. It just depends on how much blood is in the streets, so to speak, Joe, how bad the markets really are. And I would say by March, there's plenty of time for things to kind of go in the wrong direction. So I think say, look, we're going to cut. We have to. So I think it could happen in March for sure, Joe.
Yeah, and again, no sign of an immediate rate cut. So at the next meeting, no one's anticipating a rate cut there. Clearly, in the minutes, they felt like rates were at or near the peak. But again, leaving that room, well, hey, we got the right to change our mind, right? We can possibly change their minds. And then the last thing was the inflation. They're very happy, clearly moving down substantially, kind of going with that tone. They generally perceived a high degree of uncertainty surrounding the economic outlook. This is what we talked about yesterday, right? I agree with that. I don't think anybody really knows. Like Jason said, March is a long way away. There's plenty of time for different things to occur. I know next week we'll probably shift gears and start talking about a government shutdown again. Is there going to be money for Ukraine and Israel? And then, of course, the continuing resolutions. But on the jobs front, and this one's, it's interesting because we didn't get the normal seasonal hiring, but these are seasonally adjusted numbers. I don't know if they made an adjustment for that, but when we get back, we'll go over the ADP jobs number and then the first-time jobless claims number. Both of them that I will tell you right now, I thought they were good. I thought they were good numbers. Solid. The economy looks okay to me. We'll be back after the break. Eight 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Thursday. A quick look in at the markets here. The Dow, after being down the last several days, up 260 points. The S&P is up 20. The NASDAQ up 30. Gold's up 10. Silver's up 5. The 10-year note 398. So right below 4%. And the dollar lower today. And I think that's going to be the theme for 2024 is a lower dollar and higher commodity prices, mainly in the gold and silver markets. We talked about copper yesterday as well. But again, the big thing here, I think the Fed minutes had it right. No one's really sure what this economic outlook is really going to be. But that's why we talk about diversity here all the time. Right? You got to have everything, right? You got to have some gold and silver. You have to have, your 401k, your IRA, right? You got to be, in stocks. But you also got to check out other alternatives, and that's why we talk about why refi. Because a lot of times, let's face it, some of the stuff we invest in you don't like. You kind of, I got to do it, but I don't really like it, right? Look at Warren Buffett. Half of his money is in one stock. It's crazy, right? It's Apple. Right, half of his money is in one single stock. It just kind of tells you what Warren Buffett probably thinks of most of Wall Street. But you know what? Check out why refi. Up to 10.25% return. It's such a great story, right? This is people that have defaulted on private student loans, not the federal stuff that nobody's paying on right now, but. Just a great story about how these people have been written off. And it's really sad because when I was talking to Lane, he's the guy that runs Y Refi. He used to trade student debt for a living. That was kind of his job. And like a lot of things, he's like, man, there's got to be a better way. This is crazy. I don't like what I do here. These people, they just graduate from college, and And the vast majority of people, especially on the private side, see the federal side, they give you all, don't pay, and we'll talk to you later. We'll give you a few years. Maybe you haven't even paid in 10 years. Deferments, you don't get that in the private side. You don't get that. And these banks just destroy these people and their co-signers. Most of them, they default within 6 months of graduation. And, you can't get rid of it. It never goes away. Well, a lot of these people, hey, you know what? When I got out, I didn't get the job I thought I was going to get, but I got it now. Man, if someone just give me a break, I can make a payment here. That's what Y-Refi does. It's such a great story. The average person they help has their entire student loan debt paid off in 8.5 years. It's a great story. It's a great company. Just shows you, if we can get government out of the way, we can probably handle so much of the stuff that ails us right now. But check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or call them at 888-YREFI24. And remember, it's not correlated to the stock market. It has nothing to do with Wall Street. They don't care. Right? Now up, down, rates go up, rates go down, people lose their job, they don't care. Check them out, 888-YREFI24. So, as we said, Jason, we got 2 data points. First, let's go with jobless claims. Back down to just over 200,000, 202,000. This number has been super low ever since they reopened from COVID. And it remains very low. This was a number that's near the lows of the year. And then inside of that, we watch for continuing claims. That one's been rising. In other words, if you did lose your job, you're having a hard time finding one. That one fell a little bit. So overall, a really good report on jobless claims. And then we had ADP. They're a payroll processor, so their companies hire them to do their payroll, right? So they do what they call the private sector jobs report. This is the one that normally comes out on Wednesday, but because of the holiday, it came out today. 164,000. Now that's the best number since August. It's been in that 120. 130 range. It's not a superstar report, but not bad, right? Not bad. By the sectors, most all of the jobs were in service. So we had manufacturing down 13,000, natural resources and mining was down 2,000, construction was up 24,000. So good. That's what we call good producer jobs. Only 9,000, and I think that's kind of in line. That's kind of been the trend. On the service side, 155,000 to get you to the 164. IT was down a couple thousand. Financial activity and 18,000. Professional business services, that's the high-paying jobs. Only 1,000 there. The big education health services up 42,000. So that's been kind of the, when we look at education, that's government and then health. That was a little bit on the lighter side. But leisure and hospitality, remember last month we had a negative number. That's your waiters and waitresses and your maids and things of that nature. A little bounce back here, up 59,000 wages when you change jobs. Average person changing jobs got 8% more money in the job change. That was down from 8.3, still way too high. Staying at your current job, they said that you earned 5.4% more. And again, that's down from 5.6%, but still wage inflation still there. The biggest thing I think out of this report, Jason, was the Midwest and the South actually saw jobs decline, and we had job growth in the Northeast and the West. So we may be starting, it's early yet, but we may be starting to see certain parts of the country maybe starting to struggle just a little bit here.
Yeah, I think that's definitely happening. I see struggles just around here in Colorado, and this is considered a highly growing area and economically stable. So if I'm seeing some cracks around here, I can imagine certain parts of the country, Joe, what they're facing right now. So yeah, I get that what you just read, because that's what's going to happen in a lot more areas as 2024 rolls along, Joe.
Yeah, and a big layoff announcement out of Xerox. They're laying off 3,000 employees, and they say that is going to take less than 90 days to accomplish. So the pink slips are going to start showing up, I guess, from Xerox a little faster than some people may have been expecting. But Jason, overall, still though, when we look at the at least the numbers now, we got the government number tomorrow, but I think really good on jobless claims, and even on the ADP number, not terrible. This doesn't say, hey, we need to cut rates. Obviously, this doesn't say we're going to cut rates at the next Fed meeting. That's for sure. When you look at what's happening with the slowing down of businesses, Joe, it's directly correlated to what's been happening the last few years. Of course, the inflation is the biggest part. With rates up, going up crazy and being at their highs in 2023. This puts the strain on everybody around you. We know that the commercial property sector is doing really poorly, Joe. And so with the higher interest rates and businesses rely on loans, it's going to cause this kind of grief. It's going to cause hardships for those that are trying to make ends meet, especially business owners. I think small business owners, I've been looking around at some of the ones that I know and talking to them. It's just freezing up. It's just, I think I said this before, businesses that had business 3 months out, 4 months out, just 6 months, 8 months ago are now just 2 weeks out, 3 weeks out. They're looking for business. It's not filling in like it was. And so, yeah, slowdowns, that's going to be the name of the game in 2024. Well, I think we'll be talking a lot about business, especially small business slowing down, Joe. Well, I'm going to say what isn't slowing down. We talked briefly about this yesterday about the debt. Let's just look. Interest on the debt jumped another $177 billion. We now, 2024. Now, I don't know what's going to happen with the continuing resolutions, and are we going to make some deal with border security and money for Ukraine and Israel. But right now, it looks like the debt, the interest payments on the debt are going to overtake defense spending. So defense spending is right near $1 trillion. It looks like interest on the debt is going to be over $1 trillion. And then, of course, that only leaves you Medicare, Medicaid, and Social Security. That's all that is higher. When we look at Medicare, man, I just don't know how we can keep affording these things. Up $126 billion. That was a jump of 18%. And, of course, we keep trying to make it work for people. Well, you're poor and this. Well, we'll just throw in some more subsidies and some more subsidies and some more subsidies. I want to warn everybody, Medicare and Medicaid run out of money well before Social Security and the, what are they saying, 2033 for Social Security. But that's only if they don't take Social Security money to fund Medicare and Medicaid, because that's going to run out by, I want to say, 2026. So what they normally would do is they would just say, well, we'll just put a little bit more of the Social Security money over into Medicare, Medicaid. So I don't, that's what I think they would do. I still think right around that 2029, 2030, we're going to have a problem in these, I guess the third rail of the economy. Medicaid spending increased by $24 billion. That was a 4% increase. So, by the way, the interest on the debt shot up just a little bit, 133%. Medicare spending, 18%. Medicaid spending, 4%. The Pension Benefit Guarantee Company. And we haven't talked a lot about this, but these are pensions that went belly up. And the government steps up, and you get pennies on the dollar here. You're not getting what the companies promised you. That was up $38 billion. I mean, I'm just, 177, 126, 24, 38. I mean, that's $365 billion right there. And then FDIC spending amounted to $92 billion. That was an increase of $101 billion. Normally, the FDIC gets money. Every quarter, the bank's got to pay into the FDIC fund. Yeah, we definitely have a debt crisis brewing on the horizon. We'll be back right after this. 800-951-0592. I think that's probably going to be the big story for 2024, and why I think we're going to see another strong year in the gold markets. The reverse repo facility, we had crazy stuff happened at the end of the year, and then all this money flowing out at the beginning of this year. But the long story short, we've got, depending on who you ask, right, 3 to 6 months left of this repo facility. We just talked about how much more money the government is spending on the entitlements. Not to mention the interest on the debt, not to mention defense, right? So really when you think about the big spending in government, Social Security, Medicare, Medicaid, interest on the debt, and defense. I mean that's kind of the big four. That's over $5 trillion. That's more money than we take in taxes, and we haven't done anything yet, right? I mean, we haven't done anything yet. We haven't done anything other than those 4 programs. So you see the crazy situation we're in. We talk about, hey, there may be another government shutdown coming. Well, are they talking about cutting Social Security? Are they talking about cutting Medicare or Medicaid? They can't cut the interest on the debt, right? There's not, too late for that, right? That's already out the door. And the one thing they all agreed upon was defense spending. That was the one thing they all, okay, yeah, let's do that. $980 billion, whatever it was. It was just under $1 trillion. Jason, this is the thing I don't think most people understand. There's not a lot left after that. Right? And you look at all the rest of these programs, it really is a drop in the bucket when it comes to what's going on with the debt. The reason why our debt is skyrocketing is because of the big 4. I mean, you can literally go back and say, oh, you know what? We're going to cut spending on everything else by 3%. But they'll never do that. But let's just say they did that. You know how much you'd save? Maybe a couple $100 billion if you're lucky. Probably not even that. There's just not enough meat on the bone anywhere else. And now all of a sudden, all this excess money that COVID covered up, because Jason, he mentioned it yesterday. We were heading into a big crisis at the end of 2019. People forget, right? They called it the taper tantrum. Right? And really what that was a warning sign about the liquidity in these debt markets. You got to remember, we're not the only country with debt. They all got debt. And they all want to sell it. Right? Japan wants to sell its debt, right? China wants to sell its debt. Germany, France, England, the EU, everybody wants to sell their debt. I think there's two big stories outside of, are we going to have the recession? Is it going to be big? Are people going to lose their jobs? That's one story. But I think the bigger story is going to be we're going to see the end of the reverse repo facility, the end of quantitative tightening. And I would not be surprised, Jason, if we had liquidity problems like we did during the temper tantrum of 2019, where the Fed's got to create a facility once again, and then, of course, reintroduce quantitative easing, because it's just simple math. How much debt does everybody really need?
If they start printing money, you will see gold go up before that. Before or as the decision's being made, gold will take off, and everything is just going to blow up. We're not. 2023 wasn't a huge sales year for a lot of gold and silver companies. Joe and I, we didn't have a record year in 2023. And I was talking to a real estate guy, and if they drop the rates, and especially if they decide to start printing, you're going to see, let's just go with homes. Home prices are going to just soar. You're not going to see housing prices go down. You're going to see these new builders and home sales come to a freeze, but the home price is going up, and no one's going to buy it. No one's going to buy it. Gold's at all-time record highs. Our phone should be ringing off the hook night and day. People, that's what usually happens in the years I've been doing Patriot trading. And no, we got customers, but it's not like what happened in the last few years during COVID and during the beginning of the Ukraine war and during the January 6th emergencies, where people felt a little uneasy and gold was hitting that $2,000 range. No, it's showing, Joe. The people that were saving, they put it in gold and silver. Our customers, those people don't have savings. People that couldn't save are now getting a second and a third job. They're trying anything they can just to make it work. And Joe, the jobless numbers, that the Fed wants to go up to show indications of why they can slow and drop rates, and it's going to take a while for it to for it to really, really, really be bad on the job side, but it's going to happen. People really need to get ready for the price of things to really go high. I mean, the inflation we just went through, that was the warm-up. That was the preseason, Joe, for inflation, as far as I'm concerned. The real stuff is getting ready to hit us, and people better get ready. If you got cash sitting around doing nothing, you're insane not to have it in gold and silver to ride this thing out, Joe.
Well, let me tell you why I love what's happening right now. Because you're right. What normally happens when we see high gold prices. Look at the taper tantrum of 2019. We had a big jump in gold. Big jump. Matter of fact, that's kind of started this latest rally in gold. Then, of course, it rolled into COVID. But there was fear. And usually what happens when the fear subsides, the gold price falls back down. That's not happening this time. Remember, and I talked about it at the end of last year, gold's gotten real comfortable above $2,000. We are getting ready now for the next, this is a clear indicator that, hey, without any fear, look at what gold is still doing. And I think, unfortunately for us, the fear's coming here in the next, whether it's going to be 90 days, 60 days, 120 days, when all of this debt comes due. 800-951-0592, Patriot Radio News Hour. Joe and Jason on this Thursday. Gold's up 11 here, 20.55. Silver's up 10, 23.25. Yesterday we had a great special on 20s. It's better today because gold's up another $10, $11 here. $20 Liberties. Really simple. 1 through 19, $2,250. 10 through 19, $2,240. 20 or more, $2,230. Tell you what, you want to do 50? 2025 if you do 50, 22, 25, sorry, 22, 25 if you want to do 50 or more at 800-951-0592 if you want to take the add to your portfolios here as we're looking at, forget about everything. I don't know about jobs. I don't know about housing. I think both are going to be, it's going to be a harder year this year than last year. That's just my thought process on that. We'll see. Look at Walgreens today. Walgreens did okay. They cut their dividend in half. Well, just under half. They were paying 48 cents. Now they're going to pay 25 cents. Why? Well, we need to have more cash. That was their answer. We need to have more cash. Well, I guess that sounds about right. I don't think we're going to get another 20% rise in the S&P. It doesn't look that way. But all of that aside, we're right at the. I wish we were towards the end. I don't even know if we're in the middle yet of a debt crisis. See, we got fooled with COVID. COVID was a big opportunity for the government to cover everything up, and they did. They created so much money. Look at California. Right? Remember how we used to talk about California and Illinois and New Jersey and New York? All went away. Now California, we got a $68 billion shortfall. Now they just said free health care for everybody. Illegals, everybody. They're doomed. Right? We're going to see all of those come back. Who's going to pay for it all? I mean, right now, consider us fortunate that the banks had an extra $2.5 trillion. And in 1 year, so think about this, December 31st of 2022, they had $2.5 trillion. But a year and 4 days later, they have less than $700 billion. Right? I mean, that was almost $2 trillion in a year gone. Well, where did it go? It had to go buy the debt. So we know we're not going to get very far here. Now, remember, one of the other big thing that's coming towards the end of January, into February, I don't know exactly when yet, the Treasury, they got to do another, we're running the checkbook down again. We got to do another special auction. That's going to be somewhere around another $120 billion. I don't know that, Jason. I think when it gets below, this is me, when it gets below $400 or $500 billion, I think people are going to start freaking out. I don't think they're going to freak out after it hits zero. I think they're going to freak out before it hits zero, knowing that it's going to hit zero. And then what happens? And I think that's going to be very interesting. What do rates do? Do we have more and more auctions that struggle? Do we get the big tails? Are we going to see the Fed talking about rate cuts, but yet interest rates rise back above 4%, start going back towards 5%, but you're like, but wait a minute, you're talking about cutting rates. You're supposed to go down. But if there's a not good participation in these auctions, Jason, we know that won't happen.
That's right. That's right. And I believe at the end of this year, inflation will be back, and I think the Fed will be raising rates at the end of the year. I think we'll have lowered rates at the beginning, and it's going to happen. If the inflation hits hard and fast enough, they'll have to do it. Well, listen, it happened in the 70s. Well, it shouldn't surprise anyone that lower rates and raising rates in the same year is going to happen. It's already happened before. We're following the 1970s, early 80s. We haven't hit the worst part yet. Here's the thing. I always think this thing is controlled, it's planned out. I mean, not to the detail, but they didn't accidentally print all that money in 2020. They didn't accidentally shut the country down for COVID in 2020. These were planned events. They wanted to do this. In 2019, I think it's like, well, it's going to happen. It's time to do what we do, and they did what they did. And Joe, I don't know how the reset of the financial system worldwide is going to come out, but you talked about the military budget. The first thing my head was going to when I was listening to you was, if we actually shrunk the government, we'd go into a depression. We have 25 million admitted government employees, probably another 75 million dependent upon the government for their money, and you start cutting down the military, you'd have a depression. So what do you do if you're trying to heat up the economy? Go start a couple wars, I guess, because the military is the biggest part of the budget, right? And look at the wars that are going on. I don't see a good end to this, Joe.
Yeah, 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up a Thursday. 800-951-0592. Patriot Radio News Hour. Joe and Jason here wrapping up this Thursday. Gold's up 10. We're going to continue the special from yesterday, and obviously better deal today, up another $10. $20 gold pieces, 1 through 9, $22.50. 10 or more, $22.40. 20 or more, $22.30. 50 or more, $22.25. $2,225 at 800-951-0592. You got gold at $2,055. Jason, getting $20 gold pieces this close to spot. It's a great opportunity. And the best part is, as we know, because there's not huge fear, because when we get fear, everybody runs to gold. And it's a physical thing. Well, as soon as all of a sudden, the gold's disappeared, I got to raise my price. And you start paying these big premiums over the spot price. Don't wait for that. We're going to get several of these in 2024. There are going to be several moments where we're going to see fear rise. Don't be surprised. We haven't talked about the banks still got problems. Don't be surprised to see more banks having more problems, especially when the repo facility runs out. Because that's kind of the excess cash behind the scenes. This is a great opportunity here. Don't let it pass you by. And it's hard, right? Because a lot of people wait until that. Oh my gosh! Oh man, I need to wake up here and do something. Do it before. You're always, it's kind of like buying flood insurance after the flood. That's not going to do you any good. Buy it before. And today, Jason's a great opportunity to do it.
Yeah, you want to be buying things when everybody else is selling. There's a lot of people selling their gold and silver. There's a lot of people selling their assets. There's a lot of people that are doing it. And when the boom bust cycle happens and the bust part starts to happen, you need to be acquiring. If you want to be in a better position in the years to come, you need to be acquiring. And sometimes that means you cut out all of the fringe fun stuff that you do. You knock out the Starbucks coffees and everything, and do everything you can to acquire things, because from what I'm seeing, Joe, the prices of everything are going to really continue to go up. And so having gold and silver is just the easiest way. Yeah, you could. I heard someone say you could acquire a massive amount of toilet paper in whatever date, and today, 2023, you'd be way ahead. But what about the storage fees, and what if the bugs get into the packages and all those other problems? Yes, there's lots of things that can make you money, but gold and silver, gold doesn't go away at all. Silver, as long as you don't mess with it, it doesn't go away for hundreds of years, thousands of years. But you acquire when everybody else is hitting the door and selling everything they got because they can't finance it. They can't afford to live in the inflated times we're in. So, yeah, Joe, the listeners should be buying gold almost till it hurts. Obviously, we don't want you to buy it and have to turn around and sell it the next week. That's not the way it's going to work. But you really should be pushing every dollar you got into something besides cash in the bank, Joe.
Yeah, absolutely, without a doubt here. By the way, the Nasdaq's gone negative. The Dow and the S&P off its high. Another downgrade for Apple. Again, iPhone demand worries. Of course, Apple, one of the big darlings, right? Responsible for a lot of this gain. Like I said, I think it's going to be a different year on Wall Street this year. 800-951-0592. Jason and I were coming right back with the Half 50 Cup.